Hello, everyone. Welcome again to our monthly mortgage and market update for October of 2020. I cannot believe it's already so late in the year already. Nicole, thank you so much for joining me again this month. Nicole Ruith with Fairway Independent Mortgage. How are you today?
I'm fantastic, and it's always a pleasure.
Good, good, good. So, I just can't get over these interest rates. These interest rates are bonkers right now. When I was talking to you before, we were saying that 2 years ago, October of 2018, interest rates were hovering around 4.9%.
Right.
October of last year, 3.68%. And now October of this year, 2.81%. I mean, have you ever seen this before?
This is, well, no, nobody, right? Nobody has. We had hit a record low November 2012 in our interest rates. So it's 3.13. We've hit a record low 10 times this year. So we broke through the 3.13 earlier in the year, around March when all this happened, and then have been going down ever since. We had a couple moments where we thought, okay, this is where it's going to turn, and it started to poke up barely, and then it continued to come down. So the question is how long are they going to last, right?
Exactly. That's the thing. They can't last forever. So we really need to get these buyers out there. And the buyers are out there. I mean, the buyer pool for this time of year usually is dwindling down because people are getting settled for the holidays. But actually, these buyers are taking advantage of these low interest rates and getting in houses before the holidays hit. So speaking of how they're banking on these interest rates, do you see that turn coming? I mean, a vaccine should be around the corner, whether it's late this year, early next year. We don't really know. Obviously, we haven't had that date pinpointed yet, but do you see a turn coming up anytime soon?
The interest rates are going to be pulled more by the vaccine and the economy, as you mentioned, right? Not by the political unrest and some things that are happening. And some people are like, well, what's going to happen around the election? What's going to happen around the end of the year? So the interest rates, the Federal Reserve wants to keep the interest rates as low as possible for as long as possible. And they've said that they're going to keep the Fed rate low through 2022 and into 2023. But the Fed rate doesn't exactly match the interest rates. Our 30-year fixed are based on really a supply and demand in the bond market. It's based off of the 20-year yields. So when I look at the 20-year treasuries, those are allowing for slightly lower rates. So they could go down just a little bit lower, but how low? A lot of banks will tell you, or a lot of people, experts, when you talk, will tell you that maybe 2.5 is really going to be the floor. At some point, it doesn't make sense to loan money for 30 years below a certain threshold where you're starting to lose money. It costs money to continue to service those loans. So to have a return too low doesn't make sense to even originate those loans. So let's just assume it's 2.5, because I think that's probably a good rough number. Then they're at 2.81 right now. We have a little bit of wiggle room, but not much. So going into the next year, we're probably going to see a vaccine at some point, as you mentioned. And when we see the vaccine, people are going to go back to work. And when they can go back to work in a larger degree, because everybody's working from their homes right now, when they can go back to work feeling healthier, then they're going to start spending. And consumer confidence is going to go up. And when consumer confidence and spending goes up, you're going to have this push and pull of supply and demand on the economy, because the supply side has been tampered by people not being able to go work in factories. So you're going to have a pull on supply, maybe faster than what it can get there, right? So you're gonna have more demand than supply. That causes inflation. It's the same thing we're seeing with houses. We have more demand than supply, so the prices are going up. Prices will go up, inflation will happen, interest rates will go up. Now there's some things going on, and I don't wanna go down this road too far, but there's some things going on with all these lenders going IPO right now that could cause some more, honestly, some more opportunity and lower interest rates next year. So we're going to have a little bit of a push and pull between the economy and what happens if all of these lenders going public are going to create a compression on the market. And if that happens, it could benefit. But I'll tell you, I personally wouldn't bank on that. I personally wouldn't put myself in a position where I needed to rely on interest rates continuing to be low next year. I'd rather be in the hell of my dreams now for the holidays, knowing I can get it locked in at 2.81. That's crazy.
Right. And I'm seeing a lot of these buyers taking advantage of these low interest rates right now. And like you said, getting into their, new homes before the holidays hit. I'm sure you're seeing an uptick in mortgage applications.
We are continuing to see an increase in mortgage applications. I mean, nationwide, we're up 24% year over year. Now, of course, year over year, we're down 1.5% week over week, as you would expect to go down into the holidays, but we're still so much further ahead than where we were last year at the same time, which really says that people are looking around their homes and they're going, this isn't where I want to spend Thanksgiving, or maybe this isn't where I want to open up presents again and have that memory with my kids. It was okay because I was planning on going away for the holidays, and now I can't. So people are rethinking where they want to be, which is continuing to propagate that demand. And we can get people under contract all the way up to the first week in November and still get them into the home of their dreams by Thanksgiving. I mean, there's still opportunity to make it happen.
Absolutely. And just like you said, people probably aren't going to be traveling for these holiday seasons, Thanksgiving and Christmas. They're saving that money. Therefore, combined with the low interest rates, it really increases their purchase power because now they have more money down to buy hopefully a larger house for maybe their home office, maybe they're having another baby. On top of that, with the low interest rates. So, I mean, you're probably seeing a lot more buyers with a lot more purchase power right now.
We absolutely are. With the lower interest rates, it compounds. For every point in interest rate, it's like 10% on the purchase price. So it's definitely allowing those buyers to maybe get into a different neighborhood than they thought that they could before, or maybe into a better location that they thought they could, or maybe they were kind of restricted based on price point to an attached, and now they can do a single family. So this is definitely the time to be looking for that perfect home. The problem is finding it. I mean, the inventory is so tight right now.
I know. I just had a former client reach out to me this weekend saying, should we sell right now? And I said, absolutely, you should sell right now. But on the flip side, inventory is just so low right now. We really need to like pin down exactly what kind of home you want to move into next and what part of Denver Metro do you want to be in, et cetera, because inventory is so low. So anything else that you want to touch on, Nicole?
Well, I would say, based on what you just said, if I could lead in for that just for a second, the sellers. Yeah. Because I do know that it's hard to find that next property, but I will tell you this, especially those sellers at the higher price points, maybe not the sellers at the $300,000, $400,000, $500,000 range, because there's always going to be a huge demand for that from so many markets, right? First-time home buyer, move-down buyer, investor. But anything above that, we have to know that when interest rates do eventually go back up again, buyers are pushing their numbers right now. They're feeling comfortable reaching beyond where they've reached before. So you're going to have this continued acceleration of appreciation. So price points are going to continue to go up. And now on top of that, you're going to have interest rates going up. It's going to pull some buyers out of the market. And or those would-be buyers that needed to sell might not want to sell because now they're going to have this fantastic interest rate because they just refinanced. They're going to have all this equity and they're going to reconsider before they sell their home and move into your home. They're going to stay put, maybe in the not so perfect home, but because of their low interest rate and because of their equity, they're going to second guess that. So now really is this like amazing opportunity for sellers. I get it. Trying to find the next home is challenging, but this amazing opportunity for sellers. And more sellers think like that and really take heed to the risks of waiting for interest rates to go up, then maybe we'll get more inventory and more of the sellers will buy those homes.
Absolutely. Well, a lot to talk about, a lot to keep on top of. And you know, everyone watching that Nicole and I will do that. So if you need any mortgage help, please contact Nicole. Her phone number is at the bottom. If you need any real estate help, if you do want to sell, find that next home, give me a buzz. My phone number will be at the bottom of the screen. Nicole, thanks so much. We'll see you next month.
Thank you. Bye-bye.